Hey everyone, it's November 21st. Can't believe we're almost at the end of 2024. And I want to talk to you about the Vancouver real estate market, what's happening in there right now, and the trends that are happening and the stats that have fallen behind us and what's trending forward. Whenever I do that, I always love jumping to the results of last month. So let's do that. So if you haven't already, or if you've forgotten, October of 2024, Greater Vancouver real estate market did see 2,632 transactions take place, which represents nearly 32% increase from the 1,996 sales reported in October of 2023. So despite that, despite a 32% increase year over year, we're still about 5.5% below the 10-year average, the seasonal average for October. When I look at what's happening now, the now conditions, as of yesterday, when I checked the market, November 19th, in the Greater Vancouver real estate market, there was 76 transactions. Sorry, there was 1,443 transactions that had registered so far. Divide that by the 19 days of the availability of stats, we get to an average of 76 per day. Average that out for the month of November, and we are down to average estimate of 2,278 transactions is what we're estimating for November 2024, which would represent a 34% increase year over year. So what am I seeing? I'm seeing that the market is definitely busier than it was, mid-season or early season. However, it still hasn't taken off considerably versus the 10-year average. And a lot of that has to do with all those macro factors. So what we're seeing is that we've had four recent rate drops in a row. Our next Bank of Canada meeting is on December 11th, where it's kind of 50-50 whether the Bank of Canada will do another rate decrease. I'm trending that they will. Currently, we're at 4.75 as the Bank of Canada's overnight rate after they had just lowered it 50 basis points at the last October meeting. What we do see here on this illustration is that we are trending heavily over the next year and a half to most people are estimating that we're going to go into the mid 2%. So that is quite a decline in the Canada's overnight interest rate that's ahead of us over the next year and a bit. And that will be one of the big underpinnings of a busy Metro Vancouver real estate market. What we're seeing is year over year, our year-to-date housing starts are still substantially lower than they were last year. We are way off any estimation where the market is going to see more inventory hit the market that could offset and generate a balanced market. We're nowhere near what needs to happen for that. I believe next year we are going to see a lot more housing starts in 2025. A lot of that has to do with developers and folks who've put their projects on hold in 2024 or really slowed them down because of the high interest rates and also a macro factor of the political climate in BC. We just came through a political provincial voting, voting for the provincial government. And so, there would have been substantial changes should the government have changed. And so I do believe that also impact what builders were doing. All in all, we need more housing. We see a slight uptick in the inflation rate. We're now up to 2%. Last month was 1.7, which was an all-time low in recent times. And 2% certainly within the bracket that we're looking for. Also, on a macro factor, that's going to be something we need to keep an eye on is now that in the U.S. and Donald Trump has won his presidency when he's coming to office in January. He's been saying a lot about having tariffs for Canada. Mind you, I think it's a bit more bluster than bite. And when they renegotiated the NAFTA agreement last time he was in power, it was a pretty fair deal for all folks. I hope that Canada will get a really good shake at it, and I think it'll probably be less impactful than they're threatening. But that is a real factor that can cause inflation to creep up if we have restrictions on our exports and are paying a lot more for our imports. So that is something that is on the horizon in 2025, which will definitely impact the real estate market, because if inflation grows again, it will dramatically impact the Canadian government's ability to lower interest rates, which is one of the big drivers of a busy 25. what we're seeing is at around 1.7%, the annualized GDP rate now in Canada, we're at one of the lowest levels when you don't consider the COVID spike here and the financial crisis in 2009. At 1.7%, where we're currently at, that's really, really low for GDP. And so the Canadian economy is not that strong at the moment. It's not really growing aggressively, certainly not like the US. So tariffs would really have an impact. And all these strikes that have been in the past and are on the horizon are also going to have an impact on our GDP nationally. And then that impacts you locally. Unemployment rates slightly down in the last month. However, we're continuing to trend higher. We'll probably get to about the 7.5%, which is which we haven't seen since 2014, other than the COVID spike, of course. It is a factor. There's lots of immigration that's happened over the last few years. Immigration is reducing in the years ahead, so hopefully we can get more unemployed folks employed. And it is an ongoing balancing act, of course. So what's happening in the Metro Vancouver real estate market? We are on an upwards trend right now. If you are a buyer, the next 6 months is the best time to be a buyer. I think 2025 is going to be a crazy busy market. However, prices are going to be a lot more tame coming out of this down cycle than they have been in every other down cycle that I've experienced over the past 15 years, partially because discretionary spending is at a maximum. I'm certainly working with a lot of clients who have a need, have a desire, and they are writing offers, and many of them are moving forward with purchases. The biggest difference is when an opportunity comes up where other folks are interested as well. I really see that the buyers are really grouped together in what they're able to offer. And so it's keeping prices in check, which is probably a really good thing after every other upcycle was quite aggressive on the price growth. So all that, the core philosophy why Vancouver real estate is desired and aggressive is we have perceived land scarcity. We certainly have building scarcity. We have building start scarcity. We have strong immigration and a very, very attractive climate for internal migration within Canada. And so we have more people that want housing than housing available. And that, combined with lowering interest rates, combined with going into 2025, we're going to see a very active market get busier, hopefully with conservative price growth in the mid to lower single digits. But all in all, everyone's situation is different. If you're looking in real estate and you want to have a conversation, do reach out to me, Roland Kim, with Keller Williams and the Kim Buna team. I'm here to help if I can be of help. Have yourself a great day.